I'm Todd Davis. I'm the Chief Economist with the Indiana Farm Bureau, providing an ag economy update on the May WASDE report. The May WASDE is the initial estimate of the supply and demand for the 2026 corn and soybean crops. And when you look at this estimate, you need to remember that USDA tends to do things very gradually, very conservatively. And so the starting point of these estimates will be based on the prospective planning estimates from March. But based on prospective planning and trend yields, USDA is estimating a 6% smaller corn crop from last year's record at a crop of about 16 billion bushels. But that's from assuming a smaller planted harvested area from last year, and also assuming that we would not harvest a record yield. Instead, they are assuming a trend yield of 183 bushels an acre, about 2% smaller than last year. But even when you factor in a larger carry-in, total corn supply is projected to be about 2.3% smaller than the current marketing year. The use estimates are also fairly conservative. USDA backed off feed use based on the smaller corn crop. The residual component is going to be about 1.5% smaller. And exports, which have been a bright spot the last couple of marketing years, is not currently projected to be another record year, but looking at exports that are about 4.5% smaller than the current marketing year. When you add up the supply and demand, USDA is projecting corn stocks to be down about 9% from the current marketing year. This smaller level of inventory would support a higher price. USDA is projecting a marketing year average farm price at $4.40 a bushel. That would be up 25 cents a bushel from the current marketing year, but in context, it's about $2.14 lower than the prices received in 2022, which was considered a record farm income year. On the soybean side, the soybean crop is projected to increase about 4% from last year. That's from an increase in planted and harvested area. USDA is assuming harvested area to increase 4.1% from last year. USDA is assuming a trend yield of 53 bushels an acre, which is the same yield as what was harvested last year. So we look at total supply currently projected to increase 4.1% from last year. Now, soybean use is estimated to increase about 5%, and most of that is through crush. Crush growth is projected to increase 4.6%, which is going to support and partially offset a lagging export number for soybeans. The growth in crush is through the biofuels demand. That's a bright spot. Exports are currently projected to be larger than the current marketing year, but we are nowhere near the records or the levels set in 2020. USDA is projecting stocks to be about 8% lower than the current marketing year, which, like in corn, would support a higher marketing year average price, looking at an average of $11.40 a bushel. That would be up $1 from the current marketing year. But like in corn, the soybean prices have fallen about $2.80 a bushel from that record year in 2022. Now, the story on the export side, I think, is the tale of two different countries. For corn, we have had strong export growth since 2020, and with a lot of that coming from our neighbor in Mexico. 2025 exports to date have run about 20% higher from that year of 2020. The orange is soybean exports to all sources, but we know that is primarily China. And since 2020, we've really struggled, and current soybean exports are 60% of where we were back in 2020. So as a closing thoughts. Remember, this is the starting point for a series of estimates that are getting fine-tuned as we move through the growing season and head into harvest. Uh, Corn exports and soybean crush, I think, from the fundamental side would be the bright spots to focus on. This is a fairly conservative estimate because USDA is using prospective planting acreage estimates and trend yields. We'll get an update in acreage in the end of June, and then yield is going to be fine-tuned as we move into harvest. Currently, if you looked at the Dees corn and November soybean futures, you've seen that there has been a risk premium getting bid into energy markets, and that's translated into commodity prices. Um, and so that may be a pricing opportunity for those that are comfortable with the futures market and have an updated marketing plan to know your cost of production and be able to take advantage of these pre-harvest pricing opportunities. But as you talk to your friends that are not in production agriculture, you need to remind them just because the future market prices have rallied, that does not automatically translate to a larger cash price because of basis. And that definitely doesn't mean that our concerns over profit margins and liquidity have been washed away.